Hello and welcome to Joe and Paul's Another Mining Podcast. In this edition, we're talking mergers and acquisition. We just had a big M&A transaction announced in the gold space, Agnico Eagle and Kirkland Lake Gold. This is going to be the exclusive focus of our discussion today, looking at that transaction and its ramifications for the sort of broader sort of gold sector. Hi, Joe. How are you?
How's it going, Paul?
All good. Exciting times again. People have been wanting a big transaction, a big M&A transaction for a number of months now, and now we have one. There's pretty much no premium deal between Agnico Eagle Mines and Kirkland Lake Gold Mines, which will create the third biggest gold producer in the industry with an industry-leading dividend. Clearly the number one producer in Canada, a clear Canadian champion there, and with aggregate production of about 3.4 million ounces a year, of which about 2.5 million ounces will be in Canada. Lots to talk about there.
Yes. Well, the thing is that, what you're talking about, the friendly transactions, non-hostile, has obviously become a thematic since, the Randgold Barrick merger. And also the idea that, you're capturing a lot of potential synergies here. The synergies potentially here are not the same order of magnitude that a Nevada Gold Mines creates with in Nevada, but their $2 billion of savings over 10 years is attributed to some of the Northern Ontario assets that both of these companies have, including Kirkland's Detour, which they just recently added about 10 million ounces of resources to. So I think that the merger is again the same rationale for the previous mergers of Newmont Gold Corp or Barrick Randgold, was to get a scale to attract generalists and maybe to get out of the idea that you got to keep growing, and now a flat production profile that consistently generates free cash flow and shows people that they could generate the dividends that you were just alluding to.
Just to sort of get a little bit more detail there, it will be the world's third largest gold producer. Newmont is the leader with a current market cap of about, let's say, $47 billion US. Barrick is second spot with $34 billion, and this hookup will create a company with a $24 billion market cap and the leading dividend profile in the industry. So a lot there to potentially attract investors, specialist investors and generalist investors to invest in the gold sector.
Well, I would say that, one thing that Kirkland had and also Agnico had was a low geopolitical risk asset base. So Agnico very focused in Canada, a lot of significant assets in Finland, and then also some stuff in Latin America, Mexico. And then you had Kirkland with Australia, which they started off with Fosterville, a very high grade, high margin asset, and their acquisition of Detour, and recently, like I said, they added 10 million ounces there. So in terms of Kirkland getting acquired by another company, I think there's not a lot of other companies that could have acquired Kirkland without potentially radically changing the asset portfolio and leaning it to a higher risk jurisdiction. And also Kirkland had a lot of high margin assets. And so trying to find another company that also had a portfolio of high margin assets would have been difficult. I mean, both generate, in terms of their asset portfolio, the higher margin assets within about 15 companies that I looked at. But also, if you ignore the TMAC impacts from the transaction for Agnico, both generated significant free cash flow. But Agnico had more of a challenged balance sheet, let's say. I mean, I don't think it was ridiculously horrible or anything like that. It was just they had more net debt on their balance sheet. Kirkland had only cash and no debt. So that was definitely a bonus for Agnico shareholders. The Kirkland shareholders, I think, were a little bit disappointed because they thought they had everything with respect to free cash flow, great balance sheet, high margin assets, low geopolitical risk. And then they had the growth with Detour. So some of them probably wondered, why do the merger? But if you want scale with similar assets, similar management teams, Canada, based management team, and you become basically the biggest gold producer in Canada. So all that may attract more investors and then a thematic for generalists.
Well, I think you're right. Companies will soon be reporting their third quarter results, but looking back to second quarter results for the quarter for June, Kirkland Lake had more than $800 million cash on its books. Agnico Eagle had almost 300. It had debt of about 1.4 billion. So third quarter, both companies on aggregate should be sort of net debt free. One can imagine there. And it's interesting because prior to the deal being announced, there were a lot of rumors about potentially other companies being in the fray for Kirkland Lake. And I think it's interesting what you're saying about having that very strong North America, Canada focus. That I imagine is going to be a great appeal to a lot of investors. And it'll be interesting to see as the months and quarters pass, how quickly potentially the new Agnico can potentially close the gap on Barrick, which obviously has a much broader asset base in terms of geographical distribution and potentially in what people view as riskier jurisdictions. So will we see people cycling out of Barrick and into Agnico?
Well, especially I would say those ones that may not want the geopolitical risk of some parts of Africa that Barrick operate after its acquisition of Randgold. They might not want that. And so the merged company, which would be the pro forma Agnico Eagle, could present a low geopolitical risk portfolio of production and growth that would give them potentially a standout versus Newmont, versus Barrick, and also versus Newcrest. But again, Newcrest is not on the main board or listed in the US, so that's a bit of a disadvantage for them. But I think that they could present a different product to these generalists who want the leverage to gold, but don't want potentially the geopolitical ramifications of operating in some of these jurisdictions, higher risk jurisdictions.
Well, one thing I thought was particularly interesting, listening into the conference calls about this hookup, the management teams mentioned they'd been in discussions, I think, for 2 or 3 years. So yeah, it's been something that's been gestating for a long period of time, which contrasts starkly with Newmont and Goldcorp, which seemed to happen in a matter of months. So they've obviously been talking for a long period of time. And so it seemed a little bit odd that Kirkland released quite a significant resource update for Detour Lake just prior to the literally days before the merger announcement came.
Yeah, I mean, the thing is that they, like you said, had been talking for 2 years, and so for those people that may have been concerned on either side, is how could they have done so much due diligence? I mean, both are on Ontario-based, Toronto-based, so a lot of the Northern Ontario stuff wouldn't have been the problem. The problem would have been, Finland, Mexico, and Australia. But since they'd been talking since pre-COVID, they probably could have hit a lot of these projects earlier. And I think the break fee, which was, well over $400 million, reflects the commitment of both sides to say that they want this merger to actually happen. And it's hard for somebody else to come in on a hostile bid, which you would have to offer at an actual premium, plus pay the break fee and try to justify that to your own shareholders. Like, this is not a dilutive transaction. So I think that they've put in a significant poison pill for anybody who's thinking about trying to break up this transaction, which I think will probably close more likely in the first quarter of next year.
Yeah, I think from looking at the senior gold producers, we've now clearly got 3 big guys. We've got Newmont, we've got Barrick, and now assuming the transaction complete.
Well, I would say 4. I would add Newcrest, but Newcrest is definitely in the mix. I mean, Agnico definitely went higher than Newcrest in terms of market cap, but Newcrest is definitely still in that tier that if they make even incremental transactions, they could catch up to the new Agnico.
Is that something you see as likely to happen, i.e. further consolidation, perhaps a couple of the smaller guys, 2 or 3, maybe even 4, getting together to, again, get up to that sort of, let's say 20 billion, sorry, market cap that seems to be the sort of the sort of qualifying level now?
Yeah, I would say like it would be harder for these other littler companies, because then you are talking, like you said, like 4 or 5 transactions that might have to happen for those guys to get, you know, into this rarefied space. That's very complicated, and these transactions take a while to happen. So I think Newcrest is obviously the last one in this group that could potentially reach this rarefied space. After that, it gets a little bit more complicated. And what I see with the mid-tiers is that they're either trying to grow organically or trying to solidify where they are, like let's say like Endeavour trying to acquire assets in West Africa, like acquiring Teranga, you know, getting the divested asset Massawa from Barrick, and consolidating their position in West Africa. And so then you could see somebody like Equinox, you know, which they every year and a half they're into an acquisition, and they're keeping within the Americas. So you could see that continually happening. But I don't know if, you know, when we'll see the mid-tiers sort of consolidating, like an Equinox with somebody else, or an Endeavour. You know, Endeavour did take out Teranga, but that was almost like a single asset company with a diversified miner. And what is good for Endeavour is, even though they're all based in Africa, they present an investor with a diversified portfolio in Africa, such that, you know, they're not dependent on any individual country, which is more of a problem in some of these jurisdictions.
I mean, just at a superficial glance at Africa, a natural pairing could be Endeavour with B2 Gold.
Yes, but I mean, do they want the Philippines? You know, that would be the question. You know, can you divest that? They've already divested Nicaragua, but yeah, I mean, because Endeavour definitely would want to sell the idea that, you know, this is what we know, this is what we do, we're good at this, and you know, and then having something in far-flung the Philippines, you know, in a different type of deposit as well, might not work well within their thematic. The thing is that what you want is a thematic you present to investors and grow that thematic and say, okay, here's my comparative advantage. I could pick up assets, let's say, inexpensively in West Africa because they don't have the same premiums as stuff in Nevada or Canada, Australia, and I can make them work and generate free cash flow and give you dividends, you know, but my portfolio is diversified enough that, you know, you're not, you know, exposed to any single risk within a country.
One of the sort of clear thematics in recent years has been let's say, a migration towards North America, towards what is perceived as being a more secure, more robust, safer jurisdiction. Yeah. We've seen that obviously in this transaction we're talking about today. We've seen that with Yamana Gold. It's been divesting some of its assets in Brazil. It's been trying heavily, and it has been successfully getting into Quebec. And it's said that it tends to continue growing in Canada. Mark Bristow of Barrick Gold says the company needs to get bigger and better in Canada. So that seems to be Canada will continue to be a magnet perhaps for transactions. And within that context, with, you know, you've got Kirkland Lake, they bought Detour Lake a couple of years ago. They recently put out a resource update, added 10 million ounces to that big long life, multi-generational asset there. And in a similar vein, you've got, we have AEM Gold recently announcing the Gosselin, which is just by their KL.T mine development. That's looking like will make KL.T, again, potentially a multi-generational asset. Is that one a company that's going to come into play?
Well, the whole thing about a lot of these North American assets, like these big, huge open pits. And so what they're doing is basically taking assets that were previously underground mined assets because of a lower gold price. With the higher gold price, you're basically taking everything that's sort of very low grade and putting it all together and mining it cheaper by doing it open pit. but then the question is like the margin is not as high as, let's say, like a Fosterville or something like that. Like we're, milling a gram when I used to work for Newmont in the late 90s wasn't something people were attracted to. Granted, the gold price then was, $500 and now it's $1,750. What we're seeing now is an underlying cost inflation that are creeping up, and marginal assets tend to be impacted more by that cost inflation, because we saw, cost run ups because of the study. I think it was Cote Lake, I thought $250 million or something like that. But a lot of gosselin is less than a gram. So are people willing to take that, that low geopolitical risk premium for a marginal asset? Can somebody like Barrick or Newmont that calculate the reserves at $1,200, $1,250, if you took that $1,200, $1,250 price, do these other projects actually make money? Can they be declared as reserves?
I recall that some Kirkland Lake shareholders were expressing similar concerns when the company bought Detour Lake a couple of years ago. But as things have worked out, Detour Lake is now throwing off some serious cash for the company. Yep. So that's proven to be a very shrewd purchase.
But that's got to be a step function change in terms of how these majors are thinking. Or do they start creeping up on their reserves? Because if you acquire an asset and say, okay, I'm going to use $1,500 on that asset to bring it into my portfolio and justify whether it makes any sense, then I got to apply that same $1,500 to my own assets to see if I've got something better, organically, that I could develop myself without actually paying for it. So that creep in reserve price is really, when is that going to happen? Is that going to go from $1,200, $1,250 to $1,500 or something like that? And if so, when would that happen? Because I think that there's a lot of ounces within these mega merger companies that would start coming into reserves if they did something like that. Because the resources already are at $1,500.
Yeah. One question I've heard a lot of people voice is, Agnico Eagle is the 50% partner in Canadian Malartic mine, Canada's biggest mine. So why wouldn't they go through and try and buy the other 50% by taking out Yamana Gold, which the market cap of, let's say, $4 billion, is a more manageable bite for a company the size of Agnico?
Okay, so I'll take you back to maybe when Yamana bought Meridian. So Meridian Mining had El Peñon. And so, when I worked at Newmont, and I don't think I'm saying anything out of school, that was several decades ago or a couple of decades ago, but,
You're not that old, surely.
Well, yeah, I am actually. The Meridian had a great asset, and it got a significant premium for that asset, and it was a market darling. And so Newmont ended up not acquiring Meridian. Okay. Yamana acquired Meridian. Okay. But what we noticed was the Meridian asset base was actually a discount within Yamana. It was cheaper to actually buy their asset portfolio after it was acquired by Yamana than when it was in Meridian. And the reason was that Yamana had all these other assets that people didn't like. And they had, management risk and other issues that basically discounted their entire portfolio. And when you look at Yamana, you don't just look at that 50% of Malartic, you say, what am I going to do with these other assets? And so usually what a company wants before they acquire another company is for them to clean up their portfolio, which is what Yamana was doing post Meridian. They were, divesting Brazil. They were cleaning up their basic structure, their portfolio, to get acquired. And so if anybody wants to acquire Yamana and Yamana wants to get that premium of a potential acquisition, they would potentially have to clean up the rest of their portfolio and show themselves off that, hey, we've got 50% of Malartic, we should be worth so much more because of that, so if they can do that, yeah, I could see them being the next big acquisition for the merged Agnico. I could see that easily.
Okay, well, let's sort of digress a little bit. We've talked about what the impact of this transaction may be on the sort of the big producers and the mid-tiers, but let's sort of go down the food chain a little bit further. Agnico Eagle, a big gold producer in Canada, it was the aim, or is the aim, for a lot of junior explorers in Ontario, in Quebec, and perhaps other places, that eventually, once they get their projects advanced enough, that the aim is to sell them on to Agnico. Imagine that with Agnico having a big transaction to digest, any of those possibilities are going to be, at least a couple of years out in the future now.
Yeah, I would say when you promise synergy, like let's say Nevada Gold Mines, when that merged and they promise billions and billions of synergies, the first thing you want to do is realize those synergies, because otherwise that gets discounted in analysts' models that say, hey, you're not achieving what I thought you're going to achieve. So for every dollar you're saying you're going to get savings, I'll just make that 50 cents. But if you achieve the savings that you're saying, then suddenly you can take all that savings, it's embedded in their models. So the first thing I think the merged company would try to do is show people that they could realize these savings, whether it's corporate, whether it's operational, which they're suggesting that they're going to do. That would be the focus. And so before they acquire another company, do anything like that, the first priority would be to realize the synergies internally. I don't think it would take as long as it's taken for Nevada Gold Mines, because that's a much bigger complex, and that's a lot of moving parts there, potentially a lot less moving parts in merging operational synergies, whatever they are, in Northern Ontario, but definitely something that they would want to prioritize.
Okay, whilst Agnico is digesting the acquisition and trying to realize these synergies, which average out about, let's say, $200 million a year, do you think that will create the opportunity for another company to come into Ontario, into Quebec, and get some of these juniors?
Yeah, well, what we've seen is that, the Australians coming in, Northern Star and was it Northern Star? I think it was Alaska Evolution with Red Lake. You could see that them growing their footprint in Northern Ontario, and because what we've seen during COVID is people focusing in on assets that are close to their plants. Because and the other thing that we've seen with a lot of these mergers is people are buying operating assets, because they don't want the permitting risk, they don't want all these issues. But Northern Ontario and Quebec and a lot of these places in Canada, the permitting risk is a lot less than let's say the States. West Africa, I mean, the permitting risk is minimal. I mean, the biggest issues is a coup or something else, But that's not an issue. With South America, you still have social license to operate issues there, but that's not the case in Canada. So you could see somebody looking at this jurisdiction during COVID and trying to stay close to operating bases, consolidating. Whether it's Canada, Western Australia, that's, I think, something that people are looking at. And if you look at the latest report from the S&P Global guys, a lot of the exploration trend is, the grassroots has gone from 50%, more than 25 years ago, to about 30 or less than 30% of global exploration budgets.
24% this year.
Yeah. So what's basically happening is more of the exploration dollars are being spent by producer companies, and their emphasis is on brownfields, is on capturing those ounces that are closer to the plant as these plants get closer to the end of their mine life, to say, okay, do we hit reclamation, or can we just keep finding more stuff for this plant? Because permitting a new one and going somewhere greenfields is a little bit more problematic than adding, 250,000 ounces to a plant that we've already got.
Okay, well, I think we're going to be talking more specifically about exploration in our next podcast. But I think we've had a good discussion about Agnico Eagle and Kirkland Lake merger. But I think that's all we've got time for today, Joe. So this is thank you very much for joining us on Joe and Paul's Another Mining Podcast. Join us soon for the next one.